Have a drink.
Okay. Happy Monday, everybody. Welcome to the TraderMerlin Show. Hope you had a great session out there. Hope you had an even better weekend. It was a gorgeous weekend out here in sunny Southern California, so I'm glad you guys all did well. Sue says, I showed a friend your show with Bill Addis. Is there any way to follow him? Yeah, he's not a big Twitter guy, but he's getting better. If you really want to follow Bill Addis, LinkedIn is the way to go. You can just go to LinkedIn and type in Bill Addis. He always posts some great articles, and he's got a ton of great content, and that's if you're outside of Online Trading Academy. If you are part of Online Trading Academy, you can obviously jump into some of his sessions that he's got. He's got some mastermind sessions and clubhouse things that he's doing. That said, today we're going to talk a little bit about market choices or selection, and we've got a lot of questions over the weekend from various individuals. And by the way, thank you so many of you sending comments and questions about specific guests on the program, which I will follow up on. I just disconnected for the entire weekend and didn't want to do anything regarding the show or markets. So I'll get back to you all in the next day or two and then get some of those questions live on air. Without further ado, though, we do have a Choosing Your Markets show today. Part of that was the idea behind it was from listener questions that came in over the weekend, also some that came through to TraderMerlin.com, where you can always send me stuff. So without further ado, we're going to go to longtime CME floor trader, Mr. Bob Dunn, to talk about choosing your markets. Bob, how you doing?
I'm doing fine, Merlin. How's everyone out there?
All looking great.
Okay.
Everyone seems pretty happy so far.
Well, that's good. The markets are they're kind of moving around, so everyone should be happy.
Love it. Love some good action. I've received a lot of questions about the markets that you trade, and maybe I'll start with this a big umbrella piece here, because I think the biggest challenge that we face is I'll watch somebody, like I'll watch a video by yourself or watch a video from who knows, Larry Jacobson or something, and we all kind of have a unique way that we do things. And it stemmed from an individual who took an options class with Online Trading Academy. And, he felt it was way too basic for him, which I get. That's understandable. But also that the instructor, he felt the person who taught it was going over like a watch list of, 50 or 100 different things. And he goes, well, I know other people who just trade one instrument only, which may seem more appealing. But I know that there's some people who trade one instrument, some that trade a handful, 5 or 6. There's some that are trading thousands of different things. Where do you fall in that debate on what's right to trade or what you should be trading?
I fall into I trade multiple markets, but as a futures trader, and if you look at the CME products, between the agricultural products, the currencies, and the S&Ps, and you figure the bonds, you've got about 17, 18 real, decent volume products that are well worth trading, that many people don't trade. When you think about live hogs or, soybean, stuff like that, a lot of people don't trade them, but there's products that move. And who's trading Mexican peso, who's trading the New Zealand dollar. I mean, it doesn't matter where we make our money, in which product we make our money, as long as we make money. So here's the problem for many people, finding the product to trade, especially if you're just limited to, let's just say, well, I'm an S&P trader and I trade the NASDAQ and the Dow. All right, well, there's 3 products. And you're just following those 3 products, and most of the time they're moving together with each other. So you're probably just trading, maybe 1 or possibly 2. And on days that you don't see anything, what do? You're searching and searching and searching for a trade and trying to find something, and maybe you take a trade that's not there. It's maybe not such a select trade, but you just feel you got to trade because you got to do something today, and the trade doesn't work out too well. So I have a selection process. I'm a trader. Merlin mentioned, I'm from the Chicago Mercantile Exchange, and I've been down there since 1981, and I left around 2006. And the thing about being a trader is, on the trading floor, before the CME merged with the Board of Trade and they all became, went into one building, there were separate buildings. So, having a membership on one floor, I had access to all the financial products, the currencies, the interest rates, the S&Ps, bonds. or no bonds were traded at the Board of Trade, but there were interest rate products at the CME. So, and I was primarily a currency trader that hung out in the Canadian dollar pit. And I would be in the Canadian dollar pit spreading and scalping and talking, and then I'd have my list of, it's like the mastermind list of support and resistance levels of all the products, 10 different products that were on the floor that I traded. And what I would do throughout the day is I'd periodically look at each of the products. I'd go to each individual market, see where it's trading at, and I'd look at my list and see, are we near any of those numbers? And if we're near anything, especially a strong number that I may have, I'm walking over to that designated pit and I'm going to trade that market for the time being because we're near one of those levels. And that's how I traded on the floor. I moved from pit to pit and traded where the action was starting to happen or where I thought it was going to be happening. Mm-hmm. And now, well, we don't have a pit, but we still have, I actually don't have to do the walking. See, on the trading floor, sometimes I'd have to walk 50 yards. I'd have to go from one end of the floor to the other end, and it was big. And
50 yards, you going to be okay with that kind of travel there, buddy? I mean, 50 yards, you get winded doing this?
You got hundreds of people.
I know.
You're going through little aisles.
It's actually thousands. It's actually thousands of people.
Well, there are. And Chicago has 10,000 floor traders, or did at one time in its peak. Between all the exchanges, there were about 10,000 floor traders, and they were all kind of condensed in a small area. All the exchanges were kind of near each other. And that's how it was on the floor. You have the pits in different areas. And so I'd have to, walk from one pit to the next. And if you wanted to, do it, if things were happening fast, you kind of got to move quick.
Right.
And, things are happening. Now on the computer, I could walk from pit to pit with just a click of my mouse. Mm-hmm. So I could get from one pit to the next real fast. So now what do I do? As a floor trader, I told you I bounced around from pit to pit and I would go to where the action is. It's no different right now in selecting a trade. I've got approximately, let's just call the number 17. There's 17 good products. If you take the 7 currencies, there's 7 good currencies to trade. And I'm not talking Forex, I'm talking currency futures. There's 7 good currencies to trade. You've got some agricultural products. You've got, the metals. You've got the energy products. And you've got the S&Ps, the Dow, the NASDAQ. So there's products with volume that we could trade. Mm-hmm. Now, again, does it matter if we make money today in the S&Ps, or if we make money in the Dow, or if we make money in crude oil, or we make money in gold? It doesn't matter to me where I make my money. I just got to make my nut for the day. And, if I happen to make it in soybean, well, then so be it. I just made, my day in soybeans. Or maybe I've got a few, multiple trades in different markets. But the way I trade, as a futures trader, you've got to kind of be precise with your entries because of the leverage that we have, especially if you're trading more than one contract. So I believe with precise entry trades. And one of the things that I teach are these precise entry trades where you have one specific number. For instance, I'll give you a reversal pattern. It's called a shooting star. Well, on a shooting star, that formation has to be at the top of a move, an uptrend. And just to make it real simple, real quick, you've got to get short the next bar when it's going below the low of that shooting star. Well, that low has a price on it. Mm-hmm. And that low also, it doesn't matter what time frame it is, as long as it's a daily, weekly, or monthly chart. I mean, that's for me. I don't trade anything less than a daily. But, on a daily, weekly, or monthly chart, the chart pattern itself has a precise entry point. whether it's daily, weekly, or monthly.
Right.
So if you look at a chart as a chart and not as a time frame, you've got a precise entry point with that particular formation. Now, let's just do some math. If I'm doing 17 products and I don't care about time frame because I'm trading daily, weekly, or monthly time frame, and you could take a day trade off of a weekly chart or a monthly chart. When you're trading price, price is price. No one has a gun to your head that says, oh, you took this trade off a weekly chart, you're going to have to hold this trade till Friday. If I want to get out of the trade tonight, I could get out of the trade tonight. I just made $700 on it, and I want to take that $700, take the $700. No one says you got to hold it for a week. So now that being said, 17 products, and you don't care what chart you're trading it from. Let's just say on a weekly chart. Now, the market has to be in the right neighborhood. It's got to be on the right location, these formations. But you have 12 opportunities to see a shooting star on a monthly chart. Now, it does have to be at the top of a move, but you have 12 opportunities throughout the year to see a shooting star on a monthly chart, and there's 17 products. So just on a monthly chart, 17 times 12 is around 200. So you've got 200 chances to see a shooting star on a monthly chart.
Yep.
Now, 17 times 12 is 204. That's 17 products. Now, multiply it by 3 time frames. You're at 612 products.
Yep.
Or possibilities.
When you say times 3 time frames, because of what? You're looking at the daily or something? Because then you change everything with the daily.
Well, I'm looking at daily, weekly, monthly. No, if I'm taking a trade off the weekly chart, if there's a shooting star in the weekly chart, I'm getting short below that bar is low.
Yeah.
I'm basing my trade based on that chart.
Right. So, but if it's a daily, you got what, like 220 potential trade sets, right?
I was just going to get to
Oh,
that.
okay. Sorry. I stole your thunder. Sorry, buddy.
I have 220 possibilities of seeing a shooting star on a daily chart. Now multiply that by 30, because there's like 30 real good higher probability setups. Do the math, and we start having possibilities. So now, if I don't see a shooting star on 17 products and 3 different time frames today, well, maybe I'll see a bearish engulfing candle on one of 17 products and 3 different time frames today. And if I don't see that, then I'll find another reversal pattern or, head and shoulder top on, somewhere on the chart on one of those time frames. I'll find something to trade today. As a trader, I got to make money every day. And if I told you I did, then I'd be a liar. I mean, because I don't. Believe me, I have my losing days. But, you got to have some good winners. Never have any big losers. Small losers are fine. It's part of the game. Mm-hmm. But big losers puts us out of business. So it's a numbers game.
Sure.
And I'm looking at, I'm the house in Vegas. I'm not the customer walking in. I'm going to take my share of losses, but I'm only taking the higher probability trades. I look for high probability setups that I know are high probability. There's 30 good ones, whether it's bullish and bearish, and so we got 30 good setups from the upside and downside, and multiply that by 3 different time frames, because we're looking at the same stuff. We're just looking at a different chart. It just happens to be a different time frame, but that time frame has a specific price on these specific entry points.
Right.
And so, when you have a precise entry point, it's real easy to limit your risk,
Right. Let me ask you this. I get you say choosing your market. So obviously because your experience on the floor is you kind of focus it to a specific group of assets, which that totally makes sense. You filtered out a lot of the crap that, I can't imagine you trading AMC or GameStop or Nikola because they're crapshoots and they're inconsistent and they're not, really trading vehicles. They're just gamble stocks. You're looking at things that have liquidity and trend and move. Now, I'm guessing that this is an evolution because I'm going to go out on a limb and say that you weren't looking at chart patterns and formations and candlesticks and shooting stars and stuff when you're on the floors, were you?
Well, I wasn't until about 1991 is when I started looking at candlesticks. I was a bar chart person, and I just drew trend lines and my supply and demand levels, and that's what I looked at, just trend lines and supply and demand level. And then, I had one of the guys in the pit, Steve Nissen, would trade it on the floor, and he came back with these Japanese candlesticks in the late 80s, around 87, 88, sometime around then. And he's kind of hyping these candlesticks. And then one of the guys in the pit, Gary Siegel, is showing them to me. And he keeps talking to me about haramis and dojis and shooting stars. And I'm like, Gary, leave me alone. I mean, I just learned this other technical analysis, and now he's trying to tell me about shooting stars and haramis and dojis. And, I didn't want to hear it. And so, but he would constantly show me different things, and I go, Gary, leave me alone with that stuff already. I can't, harami. I have ADD. You're getting your, I can't handle all that stuff. And so he showed me something one time, as he was always bothering me, and it clicked. I saw something. I said, wait a second, show me that again, and then he showed it to me again, and I said, wait a second, you mean if this happens, then this should happen? And I saw again this precise entry type thing. To me, the important thing is knowing where you are wrong. Yeah. I know when I'm right. I don't know how right I'm going to be the way I trade. Sometimes I'm right big, sometimes I'm right a little. But I know what I'm wrong at. My wrongs are going to be a little. And so when I saw this method of precise entry type trading, I'm like, whoa, there must be something to this. So I started learning more about candlestick charts. And because I had precise entries with trend lines, and with, supply and demand zones, it's not as precise, but, if you buy it close to the distal line or sell it close to it, it gets more precise. And that's what I'm all about, is this precise. So now you take these precision type setups. I mean, like I said, I was trading them on the trading floor because later on in my career, I evolved from a scalper. I evolved to more of a position swing trader, and I was a spreader. I was a pretty big spreader. But I evolved into a swing trader from watching, a lot of these guys that I knew swing trade and hold trades for periods of time and make enormous amounts of money. And I just figured, well, that's got to be me. This is maybe why I'm not making enormous amounts of money. I was making good money, but in order to really rake it in, you want to make, 500,000 a day, 1,500 a day, or, can you crank out 6,500 a day?
I'm looking through some comments here. Baldhead Beast, thank you for the comments and questions over the weekend, by the way. He says, Bob has been right most of the time on his ES tweets. Well, he's pretty prolific. So if you guys, check out his Twitter feed, I'll even post it here. For the most part, he's got a lot of great stuff, and I say for the most part because sometimes Bob and I disagreed on a couple things in the past, so I got to give him a little hard time about that. But here's his Twitter, and you can see on his Twitter, he's out there calling it. I mean, this was from Friday, or actually last night. Talking about S&P getting long. If bid gets above 38.1750, or if the open is above 38.1750 and then goes above that, then you're looking to run to the Friday's highs at 38.58. So what's nice about what Bob does, and this is obviously something free that you guys can check out at it's Trader Goalie 1 at Twitter, is he's giving you food for thought of what he's looking at. And it's not to say that you have to, trade these levels. Certainly, I would recommend to never trade someone's levels until you're comfortable and understand their analysis and how they are breaking things down. But I think that's a great resource for anybody out there who is looking to understand maybe market dynamics from someone with Bob's experience. So congrats out there. You do pretty well there, Bob.
Thanks. Yeah, you know what? Even a broken clock is right twice a day.
That's right.
I've been doing this for a while, and
just a little.
This is how I did it on the trading floor, and I just adapted it to electronic trading. There's no different. The pit is the computer instead of me bouncing from pit to pit. And it's a little easier for me now because I have an order filler in every single pit right now that loves me every single day. It trades with me.
Nice.
Sometimes, you get an order filler a little upset with you or something. You ran through an order or something, and they punish you. They don't trade with you. They'll trade with other people around you. But,
sure.
They're not trading with you. So, it could be a personality thing sometimes down there. Well, here, it's first in, first out, and if you're the first one to press the button and you're getting the trade, and it's easier for me to trade now than it was on the trading floor. It's, I'm doing the same thing. I don't spread anymore.
It's certainly better for your back and your health because some of those video footages, it's crazy. I'm going to transition to that question right now. Let me just make sure I get the gentleman props because I took the time to take a screenshot of your chat. Jeff, who's one of our regular listeners, says, can you ask Bob, let me put it up here for the viewers, basically he was talking about the movie Floored. You guys can go to YouTube, type in Floored movie, and you can check that out. It's free. It's actually a really good insight into the absolute chaos and organized chaos that was the pits out in Chicago. Jeff says, can you ask Bob if it was really like that? And how do you keep your head straight? I would think that everyone would blow up their account on that trading floor because for all intents and purposes, you watch the video and it looked like just chaos.
Well, it's funny that you said you would think that everyone would blow up their account. 9 out of 10 people didn't make it on that trading floor. So do the math there.
Yep, right there.
So you're right in that respect. And the thing is, keeping it level it's no different than I teach in class. You got to keep the losers small. One of the best traders on the planet, Richard Dennis, told me this years ago. He says, never have a big loser. I'd rather have 100 small winners or small losers than a couple of big ones.
Yep.
And what he was talking about was the mental account. He said that, it's not the monetary account because you might have a lot of money in your account, but take a big hit and then you can't get back into the trade again because mentally, you got destroyed on that. So I kind of lost my train of thought.
That's right. You're just talking about, stop loss at Richard Dennis and the greatness of it. And I think yes. It is interesting that you had so many people fail at it. And what's interesting for me anyway is when I started this, Bob, I did not have the luxury or the honor of trading on the Chicago floors. I really wish I did. Unfortunately, my path was a bit different. One thing that I was told along the way, though, is that most people that do this fail. And that's a very tough one to swallow. And I actually remember reading a report by Bear Stearns, which of course, rest in peace, that said that 93% of people that trade fail. So, when you look at these trading floors and institutions, keep that in mind that probably 9 out of 10 people didn't make it. And there's always a common thread as to why they didn't make it. It goes right back to your statement on Richard Dennis, which is, if you keep your losses really small, you'll never take that colossal loser which wipes you out. So I'm happy taking small losses all day long, but I can't take that big one.
Well, that's what he was basically saying. He says, you can get back into the game. He says, small losses aren't debilitating to you. Once you suffer that big loss, then you don't think straight. You can't think straight.
Right.
And so you just can't have those. And I never put myself into that position to have those. I'm pretty good at that. And so for me, the fortunate thing was being around people like that drilled certain things into my head and just seeing how everything was done. And like I said, I had another fear myself. I just got married in 1980, and then, I quit a job and went down for trading in 1981. And, 6 months, 9 months after I got married, I quit my job and to do something that I didn't have a clue what I was doing. So I got on the floor with a limited amount of money, a small amount of money, and a guarantee from a stranger for $40,000 that I didn't want to have to pay him anything because I didn't want to lose any money. And so, I had that fear. I'm playing with scared money, and the hard thing was I couldn't lose the money I had because then I'd have to admit to my wife that because there were big fights.
Mm-hmm.
When I came down on the trading floor, between my wife and her mother's, tag teaming me, and it was brutal, quitting a job just after you get married. And so I didn't want to have to go home with my tail between my legs and explain to my wife, I can't do this, I lost the money, and I'm going to have to find another job now. And, that was the hard thing. I didn't not want to deal with that.
Yeah, I can't say as I blame it. And I think that a lot of people are in that situation. A lot of people, it's different because you had an organized place where you could go, a club, if you will, of traders out in Chicago. It's a bit different now when we have just screen-based trading, and most of us are just trading at home by ourselves, or if you're fortunate enough to be involved with a community like the XLT or some of the online trading academies, Mastermind, or something like that. That's nice because you do have a collective group working together, sharing ideas, etc. But I think the biggest struggle, or maybe the challenge that I faced early on, was trading by myself. I noticed that when I didn't quite understand trading well, I didn't have my discipline in place, I found myself making all these novice mistakes again, and being around some people to help keep me on the rails is pretty important. And it sounds like for you, Bob, that was one of your saving graces early on, is you knew the people around you, you knew the successful ones, and you said, I'm going to follow what they do, as opposed to making your own decisions and probably losing.
Right. Well, that was the easy thing the easier part for me, because I was being not everyone's going to take you under their wing or do anything like that. And so I was just a nice guy. And I hooked up with the right people. But, it's the same now as trading wise is the same now. It's just you don't have that camaraderie around you. Trading is boring. It's not supposed to be exciting. It's supposed to be a boring job, and it gets more boring when you're sitting there in front of the screen, watching the screen all day long. So I choose not to watch the screen. I come to my screen 2, 3, 4 times during the day, and that's it. Other than in the morning, I might be in front of it for an hour watching it and looking at all the other markets. But I try not to sit in front of it. It's supposed to be a boring job. It was boring on the trading floor when I wasn't scalping or involved with the markets. It gets boring. You put on a position and you're just sitting there watching the market. It's like, you're sitting in the break room and you might be watching the monitors, or you're standing around talking to people and watching the boards as they're changing. And it's nerve-wracking, it's hard on your stomach, and then it's boring, because when you have a position on and you're watching the thing all day long, it's kind of boring.
Yeah.
And it's exciting when the market's really hopping and you're the right way, but most of the time when you're working these positions, they're inching their way up. It's like they're going nowhere, and you realize at the end of the day, you're like, wow, this thing moved.
Yeah.
I mean, when it's moving during the day, but it moves slow. It's like an inchworm.
Let's do some group help here. Alan says, I'm one of the 9 of 10. Now what do I do? So, Alan, I'm glad that you said that, because a lot of times people just go introvert when they're losing and not accomplishing what they want. I would say this: if you are one of those, a part of that group that's not making it, it's all about evaluation analysis, in my opinion. Meaning, take a break, right? If you know that you're struggling and it's just not working for you, then take a break, regroup, and say, what am I doing right? Because there's clearly things that you are doing right. You know that because you're not losing every trade. And then go back and look at your losing trades. Because to me, personally, I don't care about my winning trades. My winning trades are nothing to brag about. They just are what they are. They're basically a result of doing what I should do. So I shouldn't celebrate those at all. For me, the main thing is your losses. What is causing you to lose? Is it you're trading too aggressive? You're making too many trades, trading things are too volatile, your stop losses are too tight? we can refine down, and it's not like you're going to fix the issue and it's permanently fixed, right? Markets are dynamic. You'll have one market period of time where it's extremely volatile, one where it just goes flat. So we need to constantly be changing. But I think that if we take a step back and look at what are causing those losses, write everything down and be brutally honest. I mean, I think that's the key. If you have an ego and you think that you're great, you're probably never going to make it anyway. I mean, you have to look at yourself in the mirror sometimes and go, I can't tell you the number of times I've looked in the mirror and said, you friggin' idiot. How freaking stupid can you be, Merlin? You told yourself you're not going to do this, and what did you do in this trade, you idiot? Over and over again, I've done that in the past. So I think you have to be brutally honest with yourself. Otherwise, who else is going to kick your butt but the market? Kick your own ass and figure it out, and then you can beat the market. That's my long-winded rant on how do I get out of that 9 out of 10 that are losing, because I was there for sure.
I was the same way. I would say that to myself every day, pretty much.
You still say it.
Absolutely. I mean, I call myself so many names. I can't say them on your show, but I called myself those names to myself and out loud, and so I get it. I totally get it. And how do you get over that? Because that's a big hump that everyone has, and that they can't get over, and that's how a lot of people lose money too, is because they sit there watching it. Right. I said it's boring. Trading should be boring, and it's really boring when you're sitting there watching it. Don't make it boring. Yeah. You got a nice backyard, get out in the yard and do something. Or if it's a nice day, go on a bicycle, ride a bicycle, go for a ride in a car, or go away. I go for lunch every day. I'm gone. I'm out with guys going for lunch, and that kills a couple hours, easily 2 hours. I'm gone and I'm away from the screen.
Right, and you're not on your phone the whole time checking it either, because you've got orders in the system. So if it stops you out, it stops you out,
I'm not saying I don't look at the phone to see where the market's at, and in all fairness, the restaurant that we go to a lot,
it's got screens.
TV, yeah. So,
cheater, Bob, you cheater.
And that seat is reserved for us. We sit over there, but we're not trading. My buddy Greg's a little more nuts than I am, but I don't want to see the screens. I don't want to see where the market is. I've got a stop that's watching the market for me. So I don't need to see. I don't need to get nervous. I'm going to get home. It's either working, the trade's working for me, and I'll move my stop. If the market moved and gave me more profit, I'll move my stop a little bit, or I got stopped out. In that case, I got stopped out with a little profit, or I got stopped out with a small loss, wherever I had to stop at. But I'm not going to allow this business to rule me, because that's what makes us the 90% that don't make it. Yeah. Is when this market takes over you. You gotta, the success is, like I said earlier, the successful traders, those are the ones that are able to take the loss, small losses, get out, and are able to get back in. Mm-hmm. But it's got to be, select trades once again. It can't just be, this looks like we're going higher. I got to get in because I don't want to miss this rally. And you jump in, and usually you're jumping in too late. You chase it a little bit, yep. And then on the pullback, that's where you get stopped out. And then you try to jump back in again, and you're jumping back in again.
Right. Yeah, you start overtrading and just making stupid mistakes. And, Alan says, leave your fear of loss at the door. And I'd amend that. And I would say, it's not that you need to take your fear of loss and leave it at the door. You have to understand that there's a certain amount that you're going to lose on a trade, right? And you have to say, am I okay with that amount? So, for me, I'll say it's $500 per trade, right? That's my day trading stop loss. I don't want to lose more than that because it changes my psyche. I don't want to lose it. But if I do, it's not going to be the one that breaks my back and just kills me. If yours is $100, then just adjust the amount of contracts or shares that you're trading so that when you do lose 100, it accommodates for your stop losses, and it's within ATR. It has a logical reason for your stop loss, and then you put that your maximum risk amount and say, all right, am I okay losing this? Because there's always that possibility that I'm going to lose this one. You always think that. And if you do lose it, you go back and you reevaluate what did you misread in that market? What happened that you could have maybe refined better? And then I think you progressively get better and better and better. But always be learning. I'd like to comment in here from Leighton. It says, I knew I was a genius and a rocket scientist. I was set in life. And then my wife woke me up and said that I was snoring. Yeah, my biggest challenge early on was my ego. Every time I had an ego or I'd brag about something, the market would kick my ass. And there's actually a former regular guy that was on this show, used to be on here, in the audience every day, who is very good at that. Just bragging and bragging and bragging and bragging on his Facebook page about how great his trading is. All of a sudden, I didn't see him talking about trading anymore. You know why? I'm going to go out on a limb and say that account went bye-bye because his ego got in the way. Don't let it get in your way, bud.
I was talking about that on Twitter probably 2 weeks ago, and maybe for a week I was on, not a rant, but I was doing a lot of talking about egos because I've seen so many of them on the trading floor. I mean, there are some guys that rightfully should have an ego.
Yeah.
I mean, you know.
But they usually don't.
And then there are the people that think they've got the right to have the ego, and it really takes over them, and those they blow out. So, you know, it's when you have the ego and you can't control it, like, you know, one of the things, what does an ego do? An ego tells you can't be wrong. How could I be wrong? I'm always right. You know, and so you stay with trades too long because you know the market's going to turn around and it ends up not turning around, and now you got a bigger loss. You know, so to make a long story short, egos will bury you. I've watched it bury you. I've seen it. That's again the common thread of the 90% that busted out was all about risk management. So what kills risk management? Ego, for one, kills risk management. Keeps you from, getting out of trades
right.
and when you should. And so, egos will bury you. You're totally right on that, Merlin.
Let's go to the one listener question because he's here with us today. I'm sure he wants to hear his question answered. Baldhead Bees, one of my regulars, says, I would love for Bob to walk us through in the show how he looks at the S&P and identify where the market's going to potentially go by identifying equilibrium of supply and demand. What sort of things are you looking for? Because you've been calling some pretty good levels and zones here over the past, for as long as I've been following your Twitter handle.
Well, okay, as a trader, again, I mentioned I don't care which market I make my money in as long as I make money today. I also don't care which direction the market's going in because if it's going up, I want to be long, and if it's going down, I want to be short. And obviously that doesn't always work out that way. But, I want to go with the market. So again, I just...
Bob, you have a senior moment already?
I'm having a lot of the senior moments lately. Now, you were talking about...
You're talking about direction. We're basically saying, when you look at these zones, I mean, obviously, a large part of when I see your tweets, it's if it breaks above this equilibrium zone.
I got it. No, I just remember now. We were talking about, and you mentioned the equilibrium. So, yeah, as a trader, again, I didn't care which, way I went, or what product I was trading. As long as I see a setup, I'm going to make a trade. And now, I don't care which direction I go. I don't care if I make money from the short side or I make money from the long side. So now, create equilibrium. Where's the balancing part on the scale? So now I've got equilibrium. If the market opens on one side of equilibrium and we happen to be trending up and it opens on that side, I want to go with the way that I think the scale is going to tip for the day. I'm going to start playing the trade from the long side.
Right.
And if we open on the other side of equilibrium and the market starts to, go that way, I'm going to play the market from the short side. Mm-hmm. Because I'm just trying to see which way is the scale going to tip today, and is it going to stay tipping that direction? Is the momentum going to keep going that direction? Because I just need a little momentum just so I could pick up a run and catch a move on this trade. I don't care where it goes tomorrow. I'll worry about that tomorrow. And if this trade looks like it's real good or I'm going to hold it through tomorrow, then I'm worrying about it a little bit sooner. But I usually, I'll reanalyze the trades, towards the end of the day if I still have them on. Mm-hmm. And decide if I'm going to hold them longer or just cash in. And
with those zones, though, I mean, I know you're probably not doing it exactly the way the core strategy does, because I know a lot of people like to take it and tweak it. But I think that's ultimately what you're doing, though, right? Is you're finding a zone, an area of price where something is stuck in, and you're just saying, I'm waiting for it to break out of it.
Yes. I do everything like core strategy other than the proximal line because I want to keep it more precise. So I'm just using a distal line, and I don't look at small time frame charts. I do all my trading from daily, weekly, and monthly charts, but I look for the zones the same way as we were taught to do them on the lower time frames. I just figure, I don't need a 15-minute chart because I'll find more levels to trade at. But as it says in the slides, when they talk about indicators, it says these indicators work in all time frames, but they're more significant in the larger time frames. Well, charts are indicators, so they must be more significant in the larger time frames. So, I prefer myself to draw my levels on the larger time frames, and then I keep them real precise. So I want to try and buy next to that demand zone, which is going to be a distal line. In my head, I'll decide how close to that line do I want to be. If we're trading 4 ticks away from that line right now and it looks like it's holding and not coming closer, I'll jump on board now. But I'll have my stop below that line, and it's going to be for the amount of money that I'm willing to risk, which isn't going to be a lot because I was taught to be real cheap. Now, my buddy Greg says I'm too cheap with my stops, but it works for me. And
yeah. Well, and I think the key there, and Kevin was saying the same thing. He goes, I kind of have issues when you tweets things out. He's kind of unclear on where the zone is, and I think that I would say it's a derivative because I know that Bob, as he just mentioned, he's going to be using supply and demand zones. But as you mentioned, if he sees it sitting right near it, okay, he's going to jump on it anyway if he believes that zone's going to hold or not hold, where the case may be. So it's not going to be as precise, I think, as you might see in like an XLT or in the grid, where it's always kind of this very structured rule base. Bob's going to tweak things a little bit to fit his style and his personality.
I do tweak it a little bit because I was taught a little bit differently. I wasn't taught to get out when we start hitting these zones. I was taught to tighten my stop up when we reach certain levels in case that zone does happen to hold. But if we go through the zone, rather than take profit off and start trimming your position size down as we start reaching levels, I was taught greed. And so as we're getting to those levels, I was taught to tighten my stop up in case the level holds. But if we go through that level, I still got my position on. I didn't take anything off. And I was taught to add on. There's where the greed comes in, buy more. Just as we were taught in class, never to add to losers. It'll bury you. It'll put you in the poorhouse. Do the math the other way. Add to the winning side of the trade instead of the losing side. And exponentially, instead of going into the poorhouse, it'll start to make you some decent money. And so that's really my style of trading. All these levels that I was tweeting today in the S&Ps, every time we went through a level, I was adding to my position. And we went through 3 levels today. And they were far away.
Yeah.
There was a good distance between each level. So pressing into that trade panned out.
Yeah. No, nice. Cool. Yeah. And it's tricky because everyone wants it to be specific and the same from person to person to person. And I think that's one of the big challenges in this is we all have a unique way of taking something and tweaking a little bit. I think what's more important than his level drawing is the stop loss side of it, and that's something I can't emphasize enough. You guys hear me talk about all the time on this show, regardless of whether I'm talking about my personal trading or any other guest. It's always focusing on the stop loss sides and the loss portion of it. It's not. I think that's the biggest factor out here. A question that's not related to trading whatsoever. Tom says, from a 50-year-old Red Wings fan, did Trader Goalie 1 start goaltending before or after the advent of goalie masks?
Well, I started after the advent. Come on, I'm not.
You've got all your teeth still, so that's what the.
You know what? Do I have one of my masks down here? No, they're in my garage.
You gotta expand your memorabilia wall. We want to see some masks over there. Come on.
I have. No, I've got a lot of pucks from players that I've bugged over the years. But no, yeah, I started playing hockey in about 65. And I learned from two guys that came to my grammar school that were from Canada. They moved to Chicago, to my neighborhood, and they started teaching me how to play hockey. And because I wasn't that great of a skater, they made me the goalie. And I just stood in between these two garbage cans that we're using as a net, and they were shooting on me. And my job was to stop the puck. Well, and then when I started watching hockey on TV, the goalie for the Blackhawks, Tony Esposito, he was the goalie at the time, and the way he was embellished by the radio announcer, would embellish the play. I mean, he was real good, Lloyd Pettit, and he made it seem like you were at the game listening to it on the radio. You virtually saw it, pretty much. And so, he was good in the way he embellished Tony Esposito. I just thought, man, this Esposito is the greatest guy in the world, and then I'd see him play on TV, and then I just figured, hey, goalie is a cool position, and I want to be it. And then I ended up, I stuck with it my entire career, and I played goalie from up until not too long ago when I had my knee replaced. That was about 13 years ago.
Bob's been donating himself to science, his knee, his back, he's
everything. I'm having an injection in my back tomorrow.
I was one of my favorite TV programs when I was growing up was the $6 Million Man, which of course nowadays $6 million is just like getting knee surgery. It seems to be the $6 billion. Anymore. Yeah, $6 million. Who cares? Angel says Bob is using distal lines to make the entry Merlin. It could be the proximal or the distal, depending. If he's got a zone defined, he's basically using one of those two lines as an entry point and a stop loss point. There you go. Make it easy.
No, if you got a distal line and a proximal line, what if I enter the trade in the middle of the zone? Then my stop loss still can't change. Your stop loss has to be on the other side of the distal line. And let's just say you decide to put it 5 ticks underneath the distal line. Now, that stop's got to be 5 ticks underneath that distal line, whether you buy the trade in the middle of the zone, high in the zone, or real close to that distal line. Your stop's got to be, in that spot. Mm-hmm. So the closer I get my trade entry to that distal line, the closer I am to my stop loss. That means that the smaller the loss that I'm going to take. It might not be that big of a deal when you got one contract on, but when you got 30, 40, or 50 on one tick, it starts to add up with some, real money.
Yeah, Bob, I gotta wrap things up. I could talk to you forever, but I try to keep the show under an hour because Big Eb wants it to go an hour, so I'm trying to not do hour shows. Tell me about your signature series. I know you've got one coming up here. I think you have a showcase tomorrow or Wednesday or something.
I have a showcase, not a showcase. The showcase I think is it tomorrow? It might be tomorrow.
Wednesday. It's Wednesday.
Wednesday.
I just looked it up on the OTA calendar.
What it is I felt a need to bring the trading to a different level, a higher level. Kind of like the trading floor, and what I talk about, these precise entry trades, and real huge focus on risk management, which OTA does the same, focuses on risk management the same way. But, I put a huge emphasis on it. And this class is 3 days of nothing but listening to me talk and show technical analysis, proper ways of charting, all these setups that I talk about, these reversal patterns. I'm big with reversal patterns. I like catching the pit the wrong way. Market's in a nice uptrend and it looks like it's stalling and getting ready to turn. I want to be one of the first shorts on board. Yeah. Because when everyone starts to bail out, they're moving the market my direction, especially when they start to panic and the market's really moving, that's when I'm really enjoying it. So, that's pretty much what I'm teaching in this class is, how to look at charts, the correct way to look at charts, correct way to draw your lines, when to bend rules a little bit, never bending rules in risk management, by the way, never, ever. If we have risk management rules, those are etched in stone. Technical analysis rules, we could bend certain things here and there, but with risk management, you can't. Start bending those rules, you'll be out of business shortly.
Yep.
So that's what the class is. It's all about technical analysis and reading the charts and finding these diamonds in the rough, these precise entry trades that are high probability or higher probability and low risk. And it's low risk providing you use a stop. If you don't use a stop, then nothing is low risk.
Right, absolutely. All right, well, Bob, thank you so much. There's a whole bunch more questions here, but I'm not going to start any, I definitely don't want to start any social media riff by asking you who Tinkerbell is. Everyone's asking who Tinkerbell is because of your tweets, but we'll just leave that one. I want to know that one. All right, Bob, thanks so much. I'm hopefully get you back on here once a month. I know it's been, I think it's almost a month for this one, but thank you so much for all that you do for the Signature Series for OTA, for your Twitter feed as well, and I always appreciate you coming on the program.
Well, thank you, Merlin. I always like coming on the program. So next time you want me to come on, let me know, and I'll be back, and I'll answer those questions that didn't get answered.
There you go. We'll leave the Tinkerbell mystery until next time. All right, Bob. Thanks so much. I'll see you next time, my friend.
Hi, Merlin. Thanks. Bye-bye.
Oh, guys, I can't put myself in the middle of a social media riff. I think I know who Tinkerbell is, but, you know, we all have somebody that just drives us crazy. You know who mine is, and I've got good reason why mine is annoying, but we'll leave it at that. All right, Bob Dunn, teaching the Signature Series for Online Trading Academy. He's got a whole bunch of stuff he's tweeting out on a daily basis. At a minimum, I think it might be a nice educational tool to sit back and look and say, why is he picking these levels? Why did he choose that specific point? To me, that is a great resource for you, because it's not to say that every trade he calls out is going to work, right? I've seen a lot of his tweets that don't work. And of course, there's always somebody that's like, your tweets suck. And then you look at the next one and it worked out fine. So trading is this game of probability, and basically saying the more times that I make a trade using as many factors in my favor as possible, whether those are technical analysis components, fundamental analysis, or just whatever components you want, the more things I can do to put the odds in my favor, the better. But we will all be wrong at times. Hopefully we are wrong for small amounts and we're right for big amounts. That's the ultimate there. All right, you can find out more information about his class. TradingAcademy.com is the place you go for that. If you are new to Online Trading Academy, you can check them out there. You can also contact your local center, because there's still physical brick-and-mortar schools all over the place. All right, for us, let's see what's going on for tomorrow. I didn't write down the economic stuff for today, even though it was pretty damn good. I looked at the economic announcements today. There was definitely some good news out there, but I will walk you through what's happening tomorrow so I can wrap up the show here. Here's your economic calendar. Today we actually had pretty decent economic data. I think building permits. I think it was new construction numbers came out today. That was way higher than expected, which of course is a good thing. That means there's a lot more spending on homes. We're seeing home prices jump, and I think right now you're going to see a further spike in real estate as everyone's trying to get a hold of these low interest rates or mortgage rates, which is something I'm doing as well. I'm hopefully going to be buying a new place here in the next couple weeks. For the U.S., you have TIP IBD Economic Optimism. You also have FOMC members speaking tomorrow. Now, these aren't the most influential, but they could say something that stirs the pot a little bit. You've got Brainerd and Daly speaking tomorrow. AIG Construction Index for Australia. You have GDP for Australia as well as Canada coming out with GDP numbers. Earnings for tomorrow. Let's check that one out. It is a big retail day tomorrow, and there's actually a lot of retail numbers coming out tomorrow or actually this week. You've got Target, Abercrombie & Fitch, Kohl's, Nordstrom's, AutoZone, not necessarily an apparel company, but certainly a forward-facing retail company, Ross Stores, Urban Outfitters, and the list goes on and on and on this week with regards to those companies reporting earnings, so be careful of that one. All right. Yes, I'm reading through your chats. I love how you guys are trying to guess who it was. Oh, it's fun. Let's try to keep the hostility to a minimum, and can't we all just be friends and get along? Yes, Big Ab, a new place. Actually looking at a place up in Big Bear. Want a place I can go up on the weekends and just escape and maybe go get back into snowboarding, which used to be one of my addictions many, many moons ago. All right, tomorrow I got a very different show. Very different. I've got a maiden voyage. Actually, I can't remember who physically sent me the video, but somebody sent me a video a week or two ago. I think it was a week ago. And this gentleman called himself the Bond King was on, and he was talking about how there's this potential for a short squeeze in the bond market, which is interesting because we've been seeing the prices of these bonds fall significantly recently. I mean, there's been a sharp slide in the price of bonds, which has caused this spike in yields. Steven Van Meter will be our guest. He's Steven Van Meter Financial. He's got a ton of videos out there on YouTube. You can check him out, but he'll be our guest tomorrow talking about, well, none other than bonds, markets, get his idea on where he thinks things are headed. Of course, as a financial planner, there's always thoughts about markets and different asset classes, but certainly we'll put a lot of emphasis on the bond side of things because I think we are getting some, I'll say almost misinformation from most of the TV pundits who are just reading teleprompters out there on your major financial news network. So that's it. He will be our guest tomorrow, Steven Van Meter. If you have any questions regarding that, send them on in at TraderMerlin@gmail.com. You guys can see it right there. Anytime you like, send in those questions and I'll get to those. Baldhead B says, Merlin, not giving up your fruit tree, are you? No, fruit trees will be staying here. This is just a vacation home. You know, now's the time to get a nice little vacation home in the mountains. Got one near the beach, got one here, so let's enjoy it. All right, cool. Thank you guys so much. Hope you enjoyed that with Bob Dunn. Always a great way to kick off the week, especially after he had some pretty nice calls on his Twitter feed over the last 48 hours. Again, you can join him at TraderGoalie1 on Twitter or take his signature series for Online Trading Academy. Until then, that's going to do it for me. Happy trading, everybody. I hope I get to see you all tomorrow. If you like today's show, click that thumbs up button. Of course, we've got a lot of new people too, so if you are new, hit that subscribe button and it'll let you know whenever we post a new video. Take care. I'll see you tomorrow.